Hey everyone, and welcome back. We're diving into SoFi Technologies' third quarter 2024 earnings.
All right, let's get into it.
So, no need to sift through pages of reports. We've got SoFi's investor presentation right here
Yep.
and a nice earnings summary
Yeah. Should give us a pretty good picture.
to break down what really matters.
It was a very strong quarter.
Okay, lay it on me. What were the highlights?
SoFi had their strongest quarter ever, actually.
Wow. Okay. So, record-breaking stuff.
Yeah, 30% year-over-year revenue increase.
30%,
They hit $689 million.
that's massive. All right, but I gotta know, what's driving that growth?
I think the big story here is SoFi's transition. They're moving away from being primarily a lender, and they're becoming more of a, full-fledged financial platform.
Interesting. So not just loans anymore, they're aiming for the whole financial shebang.
Exactly. And their technology platform, Galileo, plays a huge role in that.
Okay, I'm intrigued. So how is this whole financial platform thing actually playing out in their numbers?
Well, their financial services segment revenue from that part of the business, it doubled year over year.
Double. That's insane. So just to be clear, what exactly falls under that umbrella?
Think checking accounts, investments, things like that.
Ah, got it. So they're becoming like a one-stop shop for all things money.
And a big part of this shift is their own credit card launch. It's all about creating a bigger ecosystem.
Right, convenience is key. And it seems like people are digging what SoFi's putting down. They added, what was it, 756,000 new members this quarter?
Yeah, that's 35% growth year over year and almost 1.1 million new products added.
So they're not just attracting new customers, they're getting those customers to use more of what they offer.
Exactly. It's that cross-buying trend that really points to the success of their strategy.
It's a smart play. Speaking of smart plays, can we talk about Galileo for a second? That platform is now powering, get this, 160 million accounts.
It's a bit of a hidden gem.
It's huge.
Yeah.
And most people don't even realize it's SoFi behind it all.
Right. It's not consumer-facing, so it's easy to overlook. But it gives SoFi this massive reach.
They're quietly becoming a fintech powerhouse. Okay, enough about the behind-the-scenes stuff. Let's talk bottom line, profits. SoFi hit a GAAP net income of, what was it, $61 million?
$61 million. Their fourth profitable quarter in a row.
Fourth. So they're consistently in the black now.
They are. They're actually exceeding expectations. They even raised their full-year projections again, which is a pretty big deal.
All right, so it's not all sunshine and rainbows, right?
Right.
What are some of the challenges that they're facing?
Well, their credit card segment, while promising, is currently running at a loss.
Okay, why is that?
High investment costs. It takes a lot to launch a new product like that.
Makes sense. So it's a short-term pain for potential long-term gain kind of situation?
Exactly. And then, of course, there's the big elephant in the room, the macroeconomic uncertainty. It's something everyone's dealing with, but especially in finance, it can have a pretty big impact.
Yeah, that's fair, but at least they're acknowledging these challenges head on, right?
Absolutely. They've been very transparent about it, which I think is important.
Transparency is key. Now, on to a topic that's been making some waves, delinquency rates. Specifically for those personal loans. What's the deal there?
So overall, SoFi's credit performance is actually improving. But yeah, those personal loan delinquency rates, they have ticked up a bit.
Okay, give me the numbers. What do we look at?
The 90-plus day delinquency rate for personal loans was 0.57% for Q3 2024.
Okay. Help me understand what that actually means. What's the context here?
Well, we need to look at this in two ways. The historical trend, so how it compares to previous quarters.
Okay.
And what's called vintage data. It's essentially looking at how loans perform over time.
Vintage data. Sounds fancy.
It just means we're not just looking at a snapshot in time. We're tracking these loans as they age.
Ah, so it's like getting a full picture of the loan's life cycle. So what does the vintage data tell us about SoFi?
It suggests that they are managing risk pretty well. Even with all the economic ups and downs, they provide a very detailed breakdown, which is more than a lot of companies offer.
So it's a bit of a mixed bag, but not a full-blown red flag situation.
Right.
It seems like SoFi is really firing on all cylinders.
Yeah.
Record revenue, consistent profitability, and they're making some pretty bold moves in terms of strategy.
Yeah.
But those investment costs and, of course, the unpredictable economy, those are definitely factors to keep an eye on.
Yeah, for sure. I think it'll be interesting to see how things evolve in the coming quarters.
Agreed. This is definitely a story that's still being written, but it's definitely a captivating one. All right, let's take a quick break, and then we'll dive deeper into SoFi's member base and product segments. Stay tuned.
Sounds good. So let's talk more about their member base. It might just be SoFi's most valuable asset.
Okay, yeah. We touched on those impressive growth numbers earlier,
Yeah,
but it's not just about quantity, right?
right.
It's got to be about quality, too. Like, how engaged are these members?
Exactly. So they finished Q3 with almost 9.4 million members. That's a 35% jump year over year. But the real story, I think, is this thing they call the financial services productivity loop. It was in their investor presentation.
Productivity loop.
Ugh.
Okay, you've piqued my curiosity. Break that down for me.
Okay, so imagine like a snowball rolling down a hill. It picks up more and more snow as it goes.
Okay, I'm visualizing it.
SoFi brings in members, often with those competitive loan products like student loan refinancing.
Right, yeah.
Those members, if they're happy, they start looking at other SoFi products, checking accounts, investments, even those new credit cards.
I see.
The more products they use, the more valuable they are to SoFi.
Right.
And SoFi gets more data, they can improve their products.
Going to attract even more members.
Exactly. It's a self-reinforcing cycle of growth.
It's like they're creating this loyal community, right?
Yeah.
People who are really invested in the whole SoFi ecosystem.
Yeah, and you can see that playing out in the numbers. Their financial services segment, which is all those non-lending products, that revenue doubled year over year.
So it's like they're building this whole financial universe
Yeah.
where members can handle everything all in one place.
Yeah. And with Galileo powering other companies behind the scenes,
Right.
their reach extends way beyond their own platform.
It's pretty remarkable. It's worth noting, though, right, that SoFi is targeting a pretty specific audience.
They're going after high-income, high-credit individuals.
Okay, so they're not trying to be everything to everyone.
Right. It allows them to manage risk, and it also means they can aim for higher profitability than some of those competitors that are casting a wider net.
Okay, smart move. So let's break down the performance of some of their key product segments. Where are they seeing the most success?
Well, SoFi Money, their checking and savings accounts, those hit record highs in Q3.
That makes sense. It's like the foundation, right?
Yeah.
The gateway to all their other products.
Exactly. More accounts, more deposits, more people using direct deposit, all good signs. Then there's SoFi Invest.
Yeah.
They've been expanding their investment options, adding things like, private credit, real estate, even
yeah.
some venture capital funds.
So they're making those more exclusive investment types available to everyday people.
Exactly. And get this, 70% of new SoFi Invest signups are coming from existing SoFi members.
So that cross-selling strategy is definitely paying off.
It is. They're proving that you don't need to be a Wall Street wizard to
Yeah.
get into these potentially higher return investments.
It's about accessibility.
Yeah.
All right, on to the new kid on the block, the SoFi credit card.
Yeah, they launched 2 cards this quarter, the Everyday Cash Rewards and the Essential. They're taking on the big players in the credit card market.
It's a bold move. What makes them think they can compete in that, that really crowded space?
Well, their cards aren't just another generic credit card. They're positioning them as an extension of that whole SoFi ecosystem. Rewards that work with SoFi Money, benefits linked to other products. It's all about deepening that relationship with members.
So they're using their existing user base and the unique aspects of their platform to their advantage.
Exactly. It's not just about rewards points or interest rates. It's about offering something more integrated.
Smart. Now, SoFi really made their name by disrupting the student loan market, right?
Right.
How's that segment doing, especially with interest rates being so high?
Student loan originations actually declined year over year.
Oh, interesting.
It's mainly due to the pause on those federal student loan repayments. It's reduced the demand for refinancing.
So it's a temporary setback. They'll be ready to roll when those repayments start up again.
Exactly. But their personal loan business is doing great. They had record originations in Q3. And their loan platform business, that's the one where they generate personal loans for other companies, that hit a big milestone. Over $1 billion in loans originated.
Wow, $1 billion. So they're basically like a matchmaker for borrowers and lenders.
Pretty much. And they earn fees for each match they make. It's a capital-light model with some serious potential for high returns.
Very clever. And their home loan segment.
That had its best quarter for refinancing since 2022.
So they're taking advantage of those lower mortgage rates.
They are. They're showing some real flexibility across all their loan products, finding opportunities for growth even when some areas face headwinds.
Impressive.
Yeah.
But we can't ignore the risks that come with the lending business, right?
Right.
especially with all the economic uncertainty.
Absolutely. We talked about delinquency rates, but those bigger economic factors could make it harder to attract borrowers and manage credit risk.
It's a balancing act for sure. Okay, let's shift gears a bit and talk about the technology behind all this. Galileo.
Right, Galileo, the unsung hero of this whole story. It's not just supporting SoFi, it's powering over 160 million accounts for other fintech companies.
It's mind-boggling when you think about it.
Yeah, it really shows how scalable and reliable it is.
It's like getting a seal of approval from the entire market. These companies are trusting Galileo with their core operations.
And SoFi's not stopping there. They're building Galileo into a platform for financial innovation. They're working on fraud protection, tools for financial inclusion, even things that help consumers build credit.
So they're using their tech for good, not just profit.
Exactly. And this approach is bringing in new partnerships. SoFi announced several new clients for Galileo just this quarter.
So they're firing on all cylinders, both with their consumer products and this behind-the-scenes powerhouse.
They are. But as we head into 2025, that macroeconomic environment, it's still a big question mark. What are the opportunities? What could happen if SoFi keeps this up?
What's the upside potential here?
If they keep this momentum going, keep attracting those high-value members, and use the power of Galileo, they're in a great spot for future growth.
So it's all about staying agile, adapting to whatever comes their way, and keeping that innovative spirit alive.
Right. But let's not forget about regulations. That's a big factor for SoFi.
True, the regulatory landscape is always shifting.
But SoFi's been good at adapting and complying with new rules. They actually see regulation as a way to build trust in the fintech world.
So they're not just following the rules, they're helping to shape them. That's pretty cool.
And don't forget about their commitment to financial literacy and inclusion. They're putting resources into education, developing products for underserved communities, and advocating for policies that support financial well-being.
So they're not just about making money, they're about making a positive impact.
Exactly. It all feeds into their mission of helping people achieve financial independence.
I like that. All right, so we've covered a lot. What's the big takeaway for our listeners? What's the story here?
SoFi's Q3 performance really shows a company on the rise. They're beating expectations, they're shaking things up in finance, and they're building a loyal following.
But there are risks, right, like we discussed.
Of course. That macroeconomic picture is still uncertain, and competition in fintech is tough.
But SoFi's shown they can innovate, they're targeting the right customers, and Galileo is a huge asset. It's a pretty compelling story.
It is. And their dedication to financial inclusion and education, that really sets them apart.
Yeah, they're not just building a business, they're building a movement. It's exciting to see. Okay, so we've painted a pretty detailed picture of SoFi's current state.
Yeah.
But let's do a little bit of forecasting. What's next for SoFi? Where to go from here?
Well, their guidance for the rest of 2024 is very optimistic, to say the least. They're projecting adjusted net revenue between $2.54 and $2.55 billion for the full year.
Wow.
Which is a big jump from 2023.
So they're not just expecting continued growth. It sounds like they're predicting an acceleration of growth.
Right.
What's driving that confidence?
I think a few things. First, that financial services segment, it's not slowing down at all.
Right.
It's actually growing way faster than their lending business.
Okay.
It's becoming a bigger and bigger piece of their overall revenue.
So that strategy of diversifying, moving beyond just loans, that seems to be paying off.
Exactly. It makes them less reliant on those loan products that are really sensitive to interest rates,
Yeah.
And it helps them build a revenue stream that's more stable and predictable.
Especially important in this,
Yeah, exactly.
unpredictable economy.
Exactly.
Okay, so that's one factor. What else is feeding into that positive outlook?
Well, Galileo is a big one. They're really gaining traction, bringing in new partners, expanding their products.
Right.
They're cementing themselves as like a leader in that whole fintech infrastructure space.
Like they're the ones providing the picks and shovels during a gold rush.
Yeah, exactly. And it puts them in a very strong position. And then there's the brand recognition, right? SoFi is becoming a household name. Their marketing is working. Those Super Bowl commercials, the partnerships they've made, it's all paying off.
Right, but building a brand like that doesn't come cheap.
True, but it's an investment in the long term. A strong brand builds trust, and trust leads to more customers.
So they're playing the long game, focusing on building a business that's sustainable.
Yeah.
But of course, we can't ignore that big question mark hanging over everything, that macroeconomic environment. We've talked about the potential risk, but let's flip it. What are the opportunities?
Yeah, good point.
What's the best case scenario for SoFi, if they keep doing what they're doing?
Well, if they can continue to execute their strategy well, keep attracting those high-value members,
Right.
and really unlock the full potential of Galileo, I think they're positioned for some pretty massive growth.
So it's all about staying flexible, adapting to change, and holding on to that innovative spirit.
Exactly. But let's not forget about the regulatory landscape. That's a huge piece of the puzzle for a company like SoFi.
Yeah, they're operating in a space that's heavily regulated.
Right, and those regulations are always changing. But SoFi has shown that they can adapt. They actually view regulations as a way to build trust and legitimacy in the fintech world, which I think is smart.
It's like they're not just playing by the rules, they're helping to write them.
Exactly. And then there's their commitment to financial literacy and inclusion. They're investing in education, developing products for underserved communities, and advocating for policies that promote financial well-being.
So they're walking the walk, not just talking the talk.
Right.
All right, so after spending all this time in SoFi's world, what's the big takeaway for our listeners?
I think SoFi's Q3 performance really shows a company that's on the move. They're exceeding expectations, they're changing the financial industry, and they're building a loyal base of members.
That it's not a sure thing, right? There were risks involved, like with any investment.
Absolutely. The macro environment is a wild card, and the competition in fintech is fierce.
But SoFi has a history of innovation, they're going after the right customer base, and Galileo is a game changer. It's a pretty compelling story.
It is. And their commitment to financial inclusion and education, that really makes them stand out.
So it's more than just a business. It's a movement toward a better financial future. It's a story worth paying attention to. So as always, do your own research, think about your financial goals, and never be afraid to ask questions. That's it for this deep dive into SoFi Technologies. We'll catch you next time.